Good morning, guys. Discussion A this morning is going to be Affordable Care Act changes to in 2026. Okay, so we're going to discuss that for A this morning. Here we go. ACA subsidy changes. What do you need to know for 2025? The big picture. The Affordable Care Act subsidies are the backbone of marketplace affordability. They work by linking premium tax credits to the cost of the benchmark plan, the second lowest cost silver plan in each region, and capping what households pay as a percentage of their income. Since 2021, temporary enhanced subsidies, expanded premium tax credits introduced during the pandemic have dramatically lowered costs for millions of Americans, especially middle-income families who previously received little or no help. This enhanced subsidies are guaranteed through 2025. After that, their future depends on congressional action. The debate is not just technical, it's about whether health coverage remains affordable for millions of households or whether premiums spike in 2026. What's changing in 2025? Enhanced subsidies remain in place for the 2025 plan year. Consumers can still benefit from the expanded credits, meaning lower monthly premiums and broader eligibility. Policy uncertainty looms. Lawmakers are actively debating whether to extend these subsidies beyond 2025. Options include short-term extensions, permanent adoption of scaled-back versions with income limits, marketplace options, state exchanges are preparing for two possible future or possible futures. Continued enhanced subsidies for a revision to the original ACA framework. This means consumer messaging and plan pricing could shift rapidly depending on congressional decisions. What happens if subsidies expire after 2025? Premium shock in 2026. Without enhanced subsidies, average marketplace premiums could jump 26 to 30%. Families who have enjoyed lower costs since 2021 would suddenly face much higher bills. Coverage risk. Middle income households, those earning above 400% of the federal poverty level, would be hit hardest, as they would lose eligibility for tax credits entirely. Under the original ACA rules, some may drop coverage, increasing uninsured rates. Equity concerns. The lapse would disproportionately affect communities that gained coverage during the pandemic era. Expansions raising questions about fairness and access. Who will feel it most? Middle income enrollees, the group that benefited most from expanded eligibility, will see the steepest increase. For example, a family of 4 earning 90,000 could lose thousands in annual subsidies. State marketplaces, exchanges must recalculate subsidy levels and notify consumers quickly if enhancements end, creating administrative strain and potential confusion during open enrollment. Older adults not yet eligible for Medicare. Premiums are age related, so older enrollees often face higher sticker prices. Enhanced subsidies have shielded them. Without them, affordability gaps widen. Why prices are rising? Subsidy mechanics. Tax credits are designed so households pay a fixed share of income toward the benchmark silver plan when premiums are premium rise. When premiums rise, subsidies rise too, but only within the ACA's original limits. Enhanced subsidies lowered that share, making coverage cheaper. Underlying premium growth. Insurers are projecting higher costs due to medical inflation, prescription drug prices, and utilization trends, combined with the possible expansion of enhanced credits. This creates a double hit for consumers. Practical steps for 2025 enrollment. Shop carefully, even with enhanced subsidies in place for 2025. Compare plans across metal tiers, bronze, silver, gold, and ensures deductibles, co-pays, and out-of-pocket maximums matter as much as premiums. Plan ahead for 2026. If you rely on expended credits, consider how your budget would change if they end. Stay informed about congressional debates. Extensions could temporarily or targeted use marketplace resources. State exchanges and assessor programs are preparing consumer guides to help households understand subsidy changes. Take advantage of these tools to avoid surprises. Think long term. If subsidies lapse, some households may explore employer coverage, Medicaid if eligible, and alternative insurance models. Understanding all options now can ease transitions later. Bottom line. For 2025, enhanced ACA subsidies remain a lifeline, keeping premiums affordable for millions. But the horizon beyond 2025 is uncertain. The key takeaway: enrollees should enjoy the current affordability, but prepare for possible premium shocks in 2026 unless Congress acts. Would you like me to create a side-by-side comparison table showing what premiums look like with enhanced subsidies versus without them for typical income levels? That could make the potential impact much more concrete. Okay, guys, that's A for you for today. I'll be back on later tonight with shows. So for now, Gator Wellness, take care, folks.